So salary is over now. Salary is over from my side. Now you are supposed to revise salary. You are supposed to complete all the numericals which are given in the material which you are referring for Income Tax Act. Now before starting the topic new house property, I would like to first wind up a different topic, deductions under section 80C to 80U. Because these deductions are used in almost every chapter, whether it is salary, house property, PGBP, capital gain, other sources. And gross total income is the sum total of salary, house property, PGBP, capital gain, and other sources. So deductions under section 80C to 80U are used in almost every head of income. So after winding up of salary, it is good that we first wind up deductions before proceeding to the next heads of income. So let me share with you the Income Tax Act 1961 and let me show you that what we will be discussing in deductions under section 80C to 80U. I hope the website is visible, incometaxindia.gov.in. These are acts. So I will refer to Income Tax Act 1961. It is basically chapter 6A. All the deductions are given in chapter 6A. Chapter 1, 2, 3, 4, 5, 6, and this is 6A. As you can see, the heading of 6A, deductions to be made in computing total income. Click it, and you can see there are many deductions. 80A, AA, AB, AC, B, C, CC, CCA, CCB. So many deductions of section 80 are available. F, FFG, G, H, H, HHA, HHB, HHBA, HHC. So many. IA, IAB, IAC, IB, JJ, AA, KL, LA. You can see long list of these deductions. RRA, RRB, 80VV. You can see the long list of these deductions. All are not in our course. We are not supposed to remember all these. Further, there are some which are not at all relevant in India now because those have been omitted or those have been made inapplicable. But when you study the act, they will give you all the sections whether these are applicable or not, because it is possible that some might be interested in checking past knowledge. So when you study the income tax, they will give you each and every sections whether it is applicable right now or not, but it was there at some point of time in earlier years. So you are not supposed to learn all these deductions of 80. You are supposed to learn around 22 or 23 deductions that you are supposed to learn. 23 you are supposed to learn which are relevant for our course, and that 23 is not a big number. When you start revising it, you will find that it is easy. Now, what is the purpose of these deductions? In fact, these are a loss. These deductions put the government in a loss. Assessee is in benefit. Like if my gross total income is 25 lakh rupees, if my gross total income is 25 lakh rupees, and suppose I am getting a deduction of 2 lakh rupees under section 80G, so my total income will become 23 lakh only. My deduction under section 80G has helped me in reducing my taxable income by 2 lakh rupees. So earlier, had there been no deduction of 80G, I would have paid the tax on 25 lakh. But now there is a deduction of 80G, I will be paying the tax only on 23 lakh rupees. So I saved some tax. In fact, huge amount of tax I have saved, because this 25 lakh is more than 10 lakh, which is taxable at 30% rate. So 2 lakh deduction into 30%, I have saved around 60,000 rupees as tax because of this deduction. One human being has saved 60,000 rupees. If you think from government point of view, there are lakhs of assesses, and if everyone saves this much amount of tax, government ultimately loses the huge tax revenue. But still deductions are given. Can you think why? Can you think logically that what purpose these deductions serves from government point of view? Why government is giving these deductions when they know that they are at a loss? Can you think logically?
They increase the saving rate in the economy and like put incentives to individuals the way the government wants them to behave.
Yes, yes. Any other point? You are right. Any other point? Actually, the purpose of government is not to earn the income. The purpose of government is to make sure that the country runs, citizens are happy. In case any problem comes, or if any citizen face any problem, government comes forward. That is why we have government hospitals. In case someone wants to avail medical, they can go to government hospital. There may be some debates or discussions that whether government hospitals are working efficiently or not. That is another case, but at least the facility is available. There are government schools where the people can send their children if any citizen is facing any financial problem, or if any citizen thinks that any public school is not working efficiently, then they can send the children to government school. Those are also some government schools are working very efficiently as compared to the public schools. Like in Delhi, Rajkiya Pratibha Vikas Vidyalaya, the students there are excellent. That is in government sector. But we have exception students from that school. So government gives schools, colleges. This college is government college. We are getting the funding from the government. At very less amount of charges, the students study. The same college, had it been in private sector, there would have been heavy amount of fee. So government has to fulfill so many purposes also. Now, if government has to do it for the people, why not? Why not directly give the amount to the people through the form of deduction? Like first they will collect amount from me as an individual, and then they will spend this amount on individuals. Very simple example, if medical insurance premium or medical insurance policy, health insurance policy. Now, what purpose these health insurance policies serves? Had there been no health insurance policy, for example, if there is no such option of health insurance policies, if in India, let us assume that there is no company which is offering health insurance policy, and if people are facing financial problems, they will not go to the private hospital. Or even if the people are not facing any financial problem, the trust on government hospital is still high. In case of medical facilities, people prefer to go to All India Institute of Medical Sciences rather than in a private hospital. Yeah, queue is lengthy, time spent will be high, but the quality in a government hospital is still exceptional. The doctors who are there in government hospitals are still exceptional. Now, if there is no health insurance policy, let us assume, the burden on government hospital will become very huge. If people are facing financial problems, they will not prefer going to the private hospital. They will prefer the government hospital. So there will be huge burden on the government hospitals. What purpose these medical insurance policies serves now? That if I purchase health insurance policy, then rather than going to a government hospital, I can go and avail the treatment in a private hospital also, because I know that the amount I will get reimbursed from the insurance company. So ultimately, this is one benefit which government indirectly gives through deduction under section 80D. Whenever you purchase any health insurance policy, you can claim that premium as deduction under section 80D. If today I purchase health insurance policy for my own health, and the premium which I pay is 30,000 rupees, I can deduct 30,000 rupees while computing my taxable income as deduction under section 80D. So government has fulfilled a purpose. I took this policy for my own health, and this deduction motivated me to have my own insurance policy. Had there been no deduction, I would have thought twice or thrice whether I should go for this policy or not. But this deduction motivated me to have my own health insurance policy. Government also got a benefit. Government might have lost some tax revenue, but at least government got a benefit, or government has helped easing the burden on government hospitals, because they have started giving tax benefits on medical health insurance premium. People preferred these policies, and now most of the people are or can avail the treatment in a private hospital. So ultimately, it helps the system. The government hospitals are not at high burden because of this ATD. It's only an example. It's only my way of telling you. Similarly, we have ATU. There is a deduction ATU. Now, differently abled people can claim ATU. People who are differently abled, they face more hardship as compared to the people like me. If someone is having any health issues, if someone is a differently abled person, any issue in vision, any issue in any orthopedic problem, or any other problem of any sort or any nature, that person will face more hardship as compared to the person who doesn't have any issues or health issues. So what government did? Government has given a deduction under section 80U, where differently abled people can deduct every year 75,000 rupees or 1,75,000 rupees, depending upon the severity or depending upon whether the disability is severe or normal. But now through this deduction ATU, government has played very important role. They helped the people who are differently able to save more. Similarly, we have other deductions like 80G, donation. There are so many government funds, or in fact some private funds also, where if you donate, you can claim some deduction. Like we have this Prime Minister National Defence Fund, Prime Minister National Relief Fund, National Children Fund, then donation towards National Blood Transfusion Council, in Earthquake Relief Fund. There are so many funds, around 26 to 27 such funds are there, where if you donate, suppose as a good human being or as a person who is concerned with my nation, I want to donate if any natural calamity comes. Whether you give me some deduction or not, suppose this is my nature, for example, that I want to donate. As an individual, I want to donate. It doesn't matter, for example, whether any deduction is given to me or not. But there may be some another individual also who also wants to donate, but he thinks that whether he will get some benefit or not. This deduction ATG helps such people who are in a dilemma whether they should donate or not when any natural or national calamity has come, to come forward. Because ATG says when you donate in these designated funds, whatever you donate, we will give you it as deduction under section 80G. Now, for example, if my income is more than 10 lakh and I'm in 30% slab, if I donate 1 lakh rupees in any authorized fund under section 80G, I will donate 1 lakh, but indirectly I will save at the same time 30,000 rupees. Because had I not donated, I would not have claimed that deduction 80G. My income would have been high by 1 lakh rupees, and I would have paid 30% tax on that 1 lakh rupees. I saved 30% at one go the moment I donated. So these are some of the examples only. it is a win-to-win situation for the assessee as well as for the department. Because win-to-win situation will not be measured only in terms of monetary things. There are non-monetary uh, points also, non-monetary considerations also. As an assessee, I am directly saving my money, but government also thinks that they have extended some benefits, or they have helped achieving the purpose of promoting investments, they have helped achieving the purpose of promoting brotherhood, they have helped achieving the purpose of promoting or giving extra advantage to differently abled people, etc., etc., etc. So every deduction fulfills some purpose also. This is one thing which you should remember. Now deductions are of two types. Some are payment based deductions, some are income based deduction. What do I mean by payment based deduction? When I pay something, I get. Here I am not supposed to earn the income only. That when you first earn the income, from that income if you do something, then only I get a deduction. No. I am a salaried employee. I am earning income from this college. And for example, tomorrow I donate some amount in 80G. So no one is going to ask me that whether I have donated this amount from this salary income or from my other income. I have donated. Now it is known as payment based deduction, where there is no relationship whether you have earned that income or not. I donated, I paid 80D medical health insurance premium. I paid the premium, I get a deduction. So there are some deductions which are payment based. When you pay, you get it. There are some which are not payment based. Your payment is not necessary, still you will get the deduction. Those are income based deduction. That first, to get the deduction, you have to earn the income. The simple example is interest income in a saving bank account. If you have your bank account in a bank, for example, yearly the interest income which you are earning from saving account, not fixed deposit, saving account, is 15,000 rupees. Yearly interest income from a saving account, for example, is 15,000 rupees. First, you tell me, is this an income or not? Is this an
Yes, sir.
income or not? 15,000.
Yes, sir, it's an income, sir.
Yeah. Income under which head? This interest income is under which head?
Income from other sources?
Yes, it is income from other sources, because interest from a bank is neither salary nor rent nor business nor capital gain, so it is income from other sources. Now, if you earn the interest from saving account in a bank, you will get a deduction under section 80 TTA, maximum 10,000 rupees. So above I will show 15,000 income, and after gross total income I will write deduction under section 80 TTA 10,000 rupees. So I got a deduction. And while getting this deduction of 10,000, I have not paid anything. In fact, I have earned it. So this is an example where the deductions are income based. So deductions are of two types, payment based and income based. In payment based deduction, you pay. In income based deduction, you earn and then you get the deduction. Is this theoretical discussion on deduction is clear? If yes, please raise the hand. Otherwise, you ask me the doubt. Okay. Now we have to discuss some deductions. So let me tell you some relevant ones which are in our course. I showed you the act, all are not in our course. The relevant ones are, though there is no need to write it down, you simply listen, because gradually when I will discuss this, I will write it on the screen. But the relevant ones are 80C, 80CCC, 80CCD, then 80D, 80DD, 80DDB, 80E, 80G, 80GGA, 80GGB, 80GGC, then GHI, 80I, IAB 80 IBA, IJ 80 JJ A, 80 JJA, 80 QQB, 80 double G, 80 RRB, 80 U. So there are around 22 to 23 deductions which I will tell you now. Now I will simplify these deductions for you, but first let me give you a sample of 80C. So let me show you the website again. Let me give you an idea that how do we study these deductions. Now this is 80C. I hope the screen is visible. If you see the heading of 80C, this is the heading. Deduction in respect of life insurance premia, deferred annuity, contributions to provident funds, subscription to certain equity shares or debentures, etc. Now if you see, it is heading is B, deduction in respect of certain payment. Now the heading is B, deductions in respect of certain payments. Now there are some deductions which are payment based, like 80C is payment based. When you pay something, you get it. Okay, that is why you will find this heading in when you read the act. Now this is 80C. 80C subsection 1. In computing the total income of an assessee, being an individual or a HUF, there shall be deducted in accordance with and subject to the provisions of this section. Which section? 80C. The whole of the amount paid or deposited in the previous year, being the aggregate of the sums referred to in subsection 2, as does not exceed 150,000 rupees. Can you explain these 4 lines? What does this subsection 1 wants to convey? Read it and then can you explain what does this subsection wants to convey to the readers? Anyone who can try to simplify this point for everyone?
Maximum
Yes, sir.
deduction under this section can be 1,50,000, and maximum like payment or deposit made under this section can be 1,50,000.
No, no. It's not that I can maximum pay 1,50,000. I can pay 1 crore 50 lakh also, but I will get a deduction of 1,50,000. So this section cannot restrict me how much I can pay or deposit. I can pay any amount, but department gives me deduction of maximum 1,50,000. Is it clear? Is this point clear or not?
Yes, sir.
And then what? This is one point, that maximum deduction under section 80C will be 1,50,000 per year. Now, any other explanation of this point? Other points are also there.
This is applicable for individuals and HUFs.
Yes, only individuals and HUF can ask about this deduction. Company, firm, these people cannot come. 80C is available only to an individual and HUF. Then what? Then what? Then other relevant point. One other relevant point is there.
Sir, the sum referred are in subsection 1 are explained in subsection 2.
Yeah, that is easy point, that department or act is telling me that what type of saving Can you tell me the another relevant point?
Sir, it's in
It
relation to
indicates the
amount paid
amount.
or deposited.
What do you mean by this?
So it is only applicable on the amount that has actually been paid in regards to the provisions in the previous years. If I were to say do it in previous year 2018 and 19, I wouldn't get the deduction. But even if it was due from me and I didn't pay it, say like premium was due from me and I didn't pay it, I wouldn't be able to claim deduction on that because I haven't deposited it yet.
So I can say that this deduction is available when you actually pay. If you don't pay, there is no deduction. You cannot say that I will pay next year. Act says then claim deduction next year. Don't ask this year then. If you want to ask for deduction this year, you pay it. If you say you will pay after 3 years, then Act says come after 3 years then. So ATC is available only and only when you actually pay. If you don't pay, no deduction. Just because it is due, you cannot claim the deduction. This is the next relevant point. So main points are it is allowed. ATC is available only to individuals and HUF. Second point, you may have to actually pay or deposit the amount during the previous year. Third point, your maximum deduction cannot exceed 1,50,000. And fourth point, there are eligible contributions in which you can pay the amount. So what are those eligible contributions? Those are written in subsection 2. There are 21 such contributions. 21. You are not supposed to learn all 21, but relevant ones I will tell you. I would first like to give you an idea how this is written in the Act. Subsection 2. The sums referred to in subsection 1 shall be any sums paid or deposited in the previous year by the assessee. Clause 1. To effect or to keep in force an insurance on the life of persons specified in subsections 4. Life insurance premium. So whenever you pay life insurance premium, on whose health? On the health of those people who are written in subsection 4. Then you can claim that amount as deduction under section 80C. Let me first show you subsection 4. This is subsection 4. See, this is how you can read the Act. When you come to subsection 4, what they will write? The persons referred to in subsection 2 shall be the following, namely, clause A, for the purposes of clause 1, 5, 10, 11 of that subsection. Which subsection? Subsection 2. In case of individual wife or husband or any child, etc., etc. So let me go to the beginning. Let us not go into the technical detail, but I wanted to show you that when you read the Act is different than the language given in the books. So don't always depend on books. Try to read from the Act also. It might look a little bit difficult now, but ultimately you have to refer the Act. So I have told you one point, life insurance premium, and there are many clauses. Clause 2, clause 3, clause 4, PPF. I will simplify this. Clause 6, RPF. Clause 7, approved superannuation fund. I'm telling only relevant ones. Unit linked insurance plans. Unit linked means where we have insurance, and if you have purchased mutual funds. Tuition fees. Fixed deposits. It is lengthy. Okay, section 80C is lengthy, as you can see. I wanted to simply give you an idea, and let me start simplifying etc for you. So let me now share my screen, and let us start discussing conceptually this topic, deductions under section 80C to 80U. You got an idea about the act. In your free time, try to revise, read 80C. There is no need to learn anything from the act. You simply read it and you get an idea how the language of act is written, which is admissible in any court in India or even outside India. So today is 14th October. So the topic is deductions under section 80C to 80U, or I can say deductions under section chapter 6A. Now before starting etc, let me tell you some relevant points. First, these deductions are available from gross total income. This everyone knows now. These are available from GTI. Second, so what is the format? You compute first GTI and then you give deductions under 80C to 80U and you get total income. This deduction can never exceed GTI. That means your total income cannot be negative. So this is the point, that deductions under section 80C to 80U can never exceed GTI. Now GTI is having different components. GTI can include salary, house property, PGBP, capital gain, other sources. It includes all these five. Within capital gain, it can be LTCG of section 111A. It can be normal LTCG. It can be STCG of section 112A. Sorry, it is 111A and LTCG is of 112A. It can be normal STCG. Similarly, in other sources, it can be having what? Winning from lottery, etc. Income can be owning and maintaining resources and other. So I simply wrote these points because I wanted to show you that GTI includes every head of income, and within every head, every type of income. Now, when I'm deducting these deductions under 80C to 80U, I'm deducting these from GTI, which can be having salary, HP, PGBP, capital gain, other sources. But this deduction is not available from what? There was some connection break. I think now you can listen to me. I have written this fourth point. The deduction under 80C to 80U is not available from the following incomes: LTCG, whether section 112A, or other. Doesn't matter. Every LTCG is covered here. You cannot claim any deduction of 80C to 80U from LTCG. Suppose your LTCG is 1 lakh and your deduction is 90,000, and if there is no other income, you cannot deduct 90,000 because you cannot deduct 80C to 80U deductions from LTCG. You cannot deduct these deductions from STCG 111A, and you cannot deduct these deductions from lottery income or gambling income. That's it. This is the point which you should remember. Next point. These are also not allowed if you have opted for optional taxation scheme, except 80CCD. Deductions under 80C to 80U, except 80CCD subsection 2. Except this section, for your level, you cannot claim any deduction if you have opted for optional taxation scheme. Deductions are not available if an individual or HUF has opted for optional taxation scheme. Under section 115 BAC. In case you have opted for optional taxation scheme, you cannot claim any deduction under section 115 BAC. Are these 5 points clear? If yes, please raise your hands. Then I will start with 80C. Today we have to cover 80C. Very good. Now let us start 80C. So this is my first deduction. So what points we have noted? First point, what it is available only to an individual or HUF. It is available on the basis of amount actually deposited, oblique paid. I hope you can see there is connection break again. There was connection break. So it is the individual or HUF amount deposited or paid, whatever you have paid or deposited, or rupees 1,50,000, whichever is less is allowed as deduction. Now, next point. Eligible contributions. So you have to learn those eligible contributions. There are 21 contributions, but you have to learn around 10 or 11. And it's very easy. You simply need to revise it. So what are eligible contribution? Contribution, my contribution, if I am Mr. X, then Mr. X should do what? Mr. X should contribute towards Sukanya Samriddhi account. This is one point. You have to learn this. Sukanya Samriddhi. Sukanya Samriddhi account is an account which a parents can open in the name of in the name of their daughter, and if the daughter's age does not exceed 10 years of age. Till 10 years of age, they can open the account in the name of the daughter. and the name will be Sukanya Samriddhi account. The benefit of this account is that the interest rate is high in this account as compared to other accounts. So what you deposit in your daughter Sukanya Samriddhi account, that is eligible for 80C. Then contribution, your contribution towards your recognized provident fund or approved superannuation fund is eligible for deduction under section 80C. Then your contribution, now government brings NSC, National Savings Certificate. These are securities of the government. National Savings Certificates. Eligible for deduction under section 80C. Then investment in fixed deposit in a bank. If you invest in FDs, fixed deposits in a bank or in a post office for a period of 5 years or more. Now you can be having FD of 1 year also, 2 year also, but if you want to claim exemption deduction, you must be investing in FD for at least 5-year period, for a period of 5 years or more. Five-year period or more. So whatever you invest is eligible for 80C. Then next point, tuition fees of 2 children. Tuition fee of 2 children, any 2 children for full-time education. Like you must be paying some fees. Right now your parents must be paying some fees if you want to study in this college. So in your fee slip, whatever is tuition fee except annual charges, development charges, library charges, etc., etc., only tuition fee component is allowed to your parents as deduction under section 80C if it is for full-time education. Contribution towards PPF. Now PPF, Public Provident Fund, can be in my own account, my wife's account, or my children's account. I will get the benefit. If I deposit 10,000 rupees in my children's PPF account, I will get the benefit of that amount. Otherwise, normally everything should be for your own. RPF is in my own RPF, own FD in my name. NSCs, but this PPF can be in my own account, my spouse account, or my children account. I will get the benefit. Then we have what other relevant points are 7th point, life insurance premium, LIP, life insurance premium. Whatever life insurance premium you have paid is eligible for 80C. So what you have paid is, I can say, actual premium paid, but it comes with a restriction. Actual premium paid or 10% of sum assured, whichever is less. Every policy comes with some sum assured. Every policy comes with sum assured. It gives you some sum which any person will get in case any unfortunate incidents happen. So every policy is having sum assured. If sum assured is high, premium becomes high. How much is eligible is actual premium or 10% of sum assured, whichever is less. In case if policy has been taken on or after 1st April 2012. I might be paying the premium today, but it doesn't mean that today itself I have taken the policy. My policy might be continuing for the past 15 years. So you have to check when the policy has been taken. Now, actual premium paid or 20% of sum assured, whichever is less. If policy has been taken before 1st April 2012, because till 31st March 12 this percentage was 20%. After the amendment in the act from 1st April 12 policies, the percentage has been lowered down. Or actual premium paid or 15% of sum assured whichever is less. If policy has been taken on or after 1st April 2013 for a disabled person. Now act uses the word disabled, which in my opinion is not a good word. So I should write, I am writing differently able, but legally I should write legally I should have written the word disabled. Anyhow, I am writing for a differently abled person. In case a person is differently abled, then the amount which is eligible is actual premium paid or 15% of sum assured if the policy has been taken on or after 1st April 2013. 7th point or 8th point, I can say. Subscription towards ULIP, unit linked insurance plan. These are unit linked insurance. Can you tell me this ULIP? What do you, or not ULIP? Can you tell me what do you mean by this unit linked? Anyone who has an idea of share market, can you
Yes,
tell me about unit?
so, sir, this is an insurance policy with whose sum assured is actually linked to the performance of share markets. So, like, if whenever an unfortunate event occurs, so whatever was the investment in my share market, so that my family will get that sum.
No, what is this unit? Unit.
So this is a unit of a mutual fund, or let's say any particular investment horizon, any particular investment which the company is holding, against which these units are linked.
Yes, but the simplified version is, suppose I have 500 rupees with me. I want to purchase the share of Infosys. Let us assume that the share of Infosys is 5,000. Let us assume, it might not be the actual rate, but let us assume the share is of 5,000. Can I purchase the share of Infosys? Answer is no. But there are 10 differently people in every corner of the country, which I don't know, whom I don't know. But this mediator is running mutual fund. There is a name of this, just like share, we have a concept of mutual fund. We will go to this mutual fund organization, 10 people, and we will pay 500. So the mutual fund, this organization will be having 5,000, and this organization will purchase one share. And this organization will distribute some units, like for example, I will get 0.1 share, so 1/10 share each and everyone has got. These are units, and the purpose of this unit linked plans are, whether it is insurance plan or unit linked plan in share market, the purpose is that small investors will also or have also entered in share market. Small investors have entered in share market. This is what the benefit of mutual fund has. Then second point is, that these small investors are what? These are normally long-term investors. These are not the people who purchase and sell the shares on daily basis. Normally, small investors are long-term investors. So it promotes or it provides surety to the loan position of the company. The equity shareholders, if these are small, these are for long-term stay in that company. So the company management can work more freely in that case when they have the surety. So these are those unit plans. So when you purchase any unit linked insurance plan of any company, whatever you subscribe to, that is also eligible for 80C. So for the timing, I have given you only these points of 80C. Gradually you will learn more. Like one relevant point, yeah, which I remember now is housing loan taken from bank or a financial institution, etc. There was again net connection. So today the net connection in college is very poor. I don't know why that is happening. Anyhow, principal payment of housing loan taken from bank or a financial institution, etc. So when you have taken housing loan, you are paying interest as well as principal. I'm not talking about interest for the time, but what principal you pay, that is also eligible for 80C. For the timing, you remember only these 9 points, and let me discuss one case or one problem from my book, and then we will wind up 80C. So let us discuss one small problem.